Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 10th day of August, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. Now, it gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office or away from your desktop, just point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel. That's youtube.com/CFRN. Not only do we stream live each and every day, but we archive each daily show on our YouTube channel. Currently, there are over 1,700 daily shows archived for your educational and viewing pleasure. Let's open with a word of prayer. Heavenly Father, we thank you for everyone gathered today. Thank you that you know each of us by name and caused us to walk with you. We say that we are dependent on you and our trust is in you completely. We surrender ourselves to you and ask that you would come by your Holy Spirit and inspire our hearts today. We ask that you would fill our lives with your love, our conversations with your grace and truth. We ask you would fill this meeting with your presence. In Jesus' name we pray. Amen. Amen. Well, happy Tuesday, everybody. Hope it is a happy Tuesday for you, wherever you are. Let me give you the numbers from around the world. Cash markets, the indices. As they're called, the Dow is up 132 points. NASDAQ is down 44. S&P 500 is up 9. The Russell 2000 is up 8. So we have 3 of the major indices in the green, not by a lot, but in the green. The NASDAQ really putting a drag on the market, down 44 points. In the commodity basket, crude oil up $1.93, trading 68.41 last. That's a gain of almost 3%. Gold up $6.70, trading 17.3320 last. Silver up 14 cents, trading 23.41 last. In the Asian markets at the close, Nikkei posted a gain of 68 points. Shanghai rose 35. The Hang Seng gained 322. Now for the Shanghai, that's a gain of 1%, and for the Hang Seng, a gain of 1.25%. In the European markets at the close, FTSE up 28, DAX up 25, the CAC up 7. It's a pretty quiet, narrow trade. It is a green day in Asia. It was a green day in the UK. And with the exception of the NASDAQ, it is a green day here in the US of A. Again, we have the Dow, S&P, and the Russell in the green, but the NASDAQ down 44 points on the session. With that, we'll go to Michael and get a recap of what happened this morning in the live training room. After that, I'll be back. We'll look at the logic alerts, the concierge trade alerts, all that, and answers to your questions when I return. Michael, if you're ready, you can take it away. And if that's the sound of Michael not quite ready, that's okay. No problem, Michael. Let's see it. We'll take a look at the daily chart, guys. Here we go. S&P 500, Emini Futures, daily chart. Well, guess what? It's time to move the line one more time. We've got a new all-time historic intraday high. Will that lead to a new all-time historic closing high? Well, I guess we won't know the answer to that until the market closes today, which for futures is 5 p.m. Eastern. Okay, so that new all-time historic intraday high, 44.38. The 38% Fibonacci price extension is up at 44.40. So we're talking 1 3/4 points from the number that we put in the discussion group back, I think it was Sunday night, or maybe yesterday. I simply outlined these fib extensions overhead. And since fibs are an area, the fact that we got within 2 points, I guess we could say we got there. Now above that 38, which we expected to be resistance, or 40 to be resistance overhead, above that is 44.64. Above that, 44.87. And then a 100% Fibonacci price extension would take us all the way to 45.62. So we broke through that little trend line I drew yesterday. We only had 2 days to draw the trend line on, and on the third day we broke it. Support, let me refresh this chart. There we go. So support below us, the CFMA1, which I refer to as red and falling or blue and climbing. One is support, the other resistance. One is bullish, the other bearish.
Okay.
So as price drops, hey, if we take out the lower today, then we've got where these two trend lines intersect here. And then below that, we have the 24% Fibonacci price retracement, which is 43.88. And the daily BBC is at 43.83. Yeah, if you're ready, you can take it away.
Okay. All right. Let me just grab it then. Need the presenter. Share the screen over here. All right. So we should be good right now. You should be looking at all of
I can see it. You're all good.
Okay.
Take it away.
Here we go. Good afternoon, everyone. Today is Tuesday, the 10th day of August, 2021. If you've not taken a free trial with us, go to the homepage here at cfrn.net, and on this page, if you scroll down right here where it says free 5-day trial, no credit card required, click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that you need, all that we ask for is your name, your email, and your phone number. You can tell us biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button. You're going to be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, you don't get a free trial. So you got to click on that link. All right? All right. Now the recaps. Let's see. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today, we didn't have near as many trades as yesterday. But today is the 10th day of August, 2021. And okay. All right, Val. Today we lost 14 ticks in crude oil, made 32 ticks in gold, and we lost 1 tick on the ES. Put us at plus 192.5 on the morning session. Today it took 19 minutes and 5 trades to get to the goal for the day. At that point, we're up $130 a contract, and we took a total of 21 trades. So on the month now, we're at $2,285 a contract. That's over 7 trading days, averaging $326 per contract per 2-hour trading day. That's 1 hour. I mean, that's one contract, 2 hours in the morning. Okay, now on the year, we've gotten our goal for the day on 151 out of 153 possible days. And with one contract in 2 hours per day, and I'm going to go into something that I added to the spreadsheet. For some reason, it's not showing on this one, but I think I just need to refresh it. Let me just do that. On the year now, we're at $94,477 per contract per 2-hour trading day. That's over 153 trading days, averaging $617 per contract per 2-hour trading day. Oh no, this is the stuff that I added. It's right here. Okay, so what I added, guys, if I stopped when I got the goal for the day, I added where we were at if we would have just stopped trading when we got the goal for the day and added one contract per month. Okay, and just stopped when we got the goal for the day. And this is where we'd be at right now. If we stopped when we got the goal for the day, did everything exactly like I did and stopped when we got the goal for the day and added one contract per month. So the total number of minutes that it took us to do all that, 45 hours, the total number of hours that it took us to do all that, be 45 hours and 23 minutes. So if you take the total of this divided by the total number of hours, that's what you get per hour. Crazy, huh? But it's what I've been doing all year. All right, so let's get into what we actually did do. All right, we'll start out with the ES today. The ES was a little bit of a mess again. I missed probably the best trade that we had. I took this trade right here, got a break even on it. We went long. It was a close up above the trend line right here. And we went long right there, and it just got sideways after we went long. We ended up with a break even on this. It did go right up to the next zone, consolidated a little bit, went through it, came right back down. It just like slammed right down to this zone. I missed this one. I don't know where I was when that was going on, but I missed that one. And it pulled up off of it a little bit, off the zone. So it went right down to the zone, pulled up off it a little bit, went right back into it again, dropped through it, and I thought it was going to keep going a little bit. I think I might have even put some numbers on the downside. I guess this was the number on the downside that I had put. And I was looking for it to get down there, and it never got down there. It got within a tick right here of down there. But then it turned around, started moving up right in here. I was looking for it to get up to this level right here, and it did get up to that level, but that was during the break. Okay, so we didn't end up with any trades there during the break. That was the ES. Now I'll do crude oil. We ended minus on crude today. We had a couple of stop outs again. 3, it looks like. Okay, but we started off the day just fine with crude. Let's go back to right here. We missed this trade here right at the beginning. It would have been a break even had we taken it. Then we missed this beautiful trade right here. I really wish I would have gotten that. I know some guys did get that, and that was their whole day right there. But I did get this one, and we picked up 10 ticks on this trade. Okay, and then I ended up with a break even there. There was a trade in here that I missed right there, and I had highlighted this area when it was over here. I said I think we're going to get into some chop in this area, and I drew the box saying that we're going to be in chop in that, I thought, and we ended up in chop. And then we got this next trade right here. It looks like I got a break even on that, and then we stopped out. So we're at +2 after this stop out right here. I missed a short here and a long here. This would have been profitable. This would not have. Then we stopped out again. At that point, I was at -6. We had a break even that went up to where we thought it was going to go. We had another break even, almost went up to where we thought it was going to go. Then we had one more stop out toward the end of the session, and that put us -14. Okay, then right in here, I missed a trade right at the very end, and then it just got choppy. And let's see, was there anything? It looks like there was a long trade right here. This highest probability trade setup was a long trade right here. It gave a little bit of profit and followed up with a little bit more right there. That was crude oil. We ended up, after those 3 stop outs, we ended up with -14 total on crude. Now, we'll go here. All right. Here we are on gold. Now our first trade on gold was right in here. It was up here, but it pulled back really fast, and I got in here. That's why I didn't end up stopping out on this, and I ended up with 4 ticks profit on that. Then I stopped out here. I was at minus 4. Then I picked up 8 there to get us to. Was it 8? No, I think it was 5 there to get us to +1. Then something else to get us to plus. No, it was. I picked up 8. No, 5 and then 3. That's what it was. 5 and then 3 to get us to +1. To +4. Right, 5 to +1 and then 4 to +3. Whew, I'll get it right. Okay, and then over here we went to +7. Then we had a break even, and we went to +13. And looks like we went from 13 to somewhere in here. We went 13 to 14. Then we went to 15. Then we went to 25, and then to 30 right there, and then 32. And we missed that trade and that trade, both of which would have been profitable, and had a break even on that one. That one went where we thought it was going to go. This was the pullback number. It went there, but it didn't give us any more trade setups. And it looks like I didn't even count these last couple right here. We had some small gain there, a break even there, and a break even there. And this would have been a nice trade here if we'd have gotten into it. And then during the break here, would have been a nice profitable long trade right there, a break even right there. But we ended up +32. Actually, we ended up more than that on crude, but +32 is what we got in the books. So let's bring this back up. Okay, now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 10th day of August, 2021. We lost 14 ticks in crude, made 32 ticks in gold, and 1 tick on the ES. Put us at +192.5 on the morning session. Today it took 19 minutes and 5 trades to get to the goal for the day. At that point, we're up 130. We took a total of 21 trades this morning. Okay, so on the month now, we're at $2,285. That's over 7 trading days, averaging $326 per contract per 2-hour trading day. Let's see. On the year, we've gotten our goal on 151 out of 153 possible days. And that puts us at $94,477 a contract. Now, that is 1 contract, 2 hours per day. So 153 days, averaging $617 per contract, right? 1 contract, 2 hours per day. Now, if I had stopped when I got my goal for the day and added 1 contract per month, this is where we'd be at right now. Okay, we'd be at 8 contracts. This is the number. This is the number of minutes so far this month that it's taken me to get my goal. I think that's what that number is. Yeah, this is the total amount that we had if I'd have stopped when I got my goal. And this is the total number of minutes that it's taken so far. All right. Now, if you have not taken a free trial with us and you want to, then go to the homepage here at cfrn.net. On this page right here, it says free 5-day trial, no credit card required. Click on that. You'll be brought to this page, eminitrainingschool.com. On this page, all we need is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay. If you don't click that link, you don't get a free trial because we don't know you did it. All right. All right. And with that, if anybody has any questions, you just type them into the question box. Most of you all know that, but we're here to answer your questions. All right. With that, I'm going to pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. We're ready. Okie doke. Recap of the recap.
Today, it took 19 minutes and 5 trades to get to $130 per contract.
Good job.
Thank you.
And Logic 247 this week so far. Oh, by the way, guys, Governor Cuomo just announced that he is going to resign. Thanks for sharing that, Shane. We're in week 158 of Logic 247. Logic 247 is our around-the-clock Emini alert service. We open for business Sunday night, 6 p.m. Eastern. The alert channel stays open until Friday afternoon at 5 p.m. Eastern. Alerts are not based on the clock. It's whenever opportunity presents itself. We have traders around the world. Our day session is their night session, etc., and so on. So, this week, since Sunday night, 6 p.m. Eastern, we've issued a total of 28 alerts, 5 never triggered. Still waiting on the outcome of 1. We've had 22 actionable alerts, of which 1 or 5% would have been stopped out based on not risking more than $300 per contract per trade, less when possible. Again, those alerts are based on current price action, and they flow around the clock. An alert could come at 2 a.m. or 2 p.m. Important thing to remember is that once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So when an alert triggers, if you miss it because you're sleeping or you're busy, don't worry. There's an extremely high probability it's going to trigger again. Our concierge trade alerts, the original alert service, the format is different. These are posted as a static report shortly after the Globex open. So Globex opened last night at 6 p.m. The alert or the report came out at 6:20 p.m. The way you handle these, go to your chart, draw a line in the sand, the long number 4437. Once this is posted, if price starts trending up towards 4437, that's bullish. So our strategy will start looking for opportunities to buy the market. Also, as price starts trending up towards 4437, you'll use what you learn in the live training room to find opportunities yourself to buy the market, using everything that Michael and Valerie teach you in the live training room. If price starts trending down towards 4423, that's bearish. Our strategy will look for opportunities to sell the market, sell the rallies, and that's where you'll use everything you learn in the live training room. Now, before we get into the charts, a couple of headlines here. The big one, of course, Governor Cuomo. Elon Musk. Nice job. In 2020, he received $6.7 billion, that's B as in billion, in compensation. His compensation makes him the highest paid chief executive in the U.S. for 3 years running, earning 11 times more than the second highest paid U.S. CEO. Bill Gates transferred another $2 billion worth of stock to Melinda. Since the couple announced their divorce in May, Melinda has received about $6 billion worth of stock in transfers. Amazon Web Services, we've talked about how about 60% of all web traffic at some point on its journey travels through an Amazon Web Server. Amazon Web Services is hiring more than 20,000 people. Engineers, IT services, solution architects, and no, I thought I had a list of how much they were paying them. I don't. The Tesla Cybertruck is officially delayed to 2022. It was supposed to ship this year, but the delay isn't a complete surprise. Elon warned in January production could be delayed. Pizza Hut is now getting into the artificial intelligence game. They're going to use AI tech to recommend foods to customers based on the weather. It's unclear, though, how the technology would work and what food goes best with what weather. Some Amazon sellers beg people to delete negative reviews. While contacting customers outside of Amazon's system is against the company's rules, some sellers track people down and ask them to remove their reviews, and even offer to double refunds if they're willing to do so. So the next time you go to buy something on Amazon and you go to the reviews, take it with a grain of salt. Apple says it will not let the government use its new image detection system for surveillance. The company defended its new software, which will scan for child sexual abuse images, which we support very much. That, they're doing something about. It's amazing if you put out a tweet that's slanted to the right or conservative in any way, or put up a YouTube video, boy, they can snatch that thing off the internet so fast, you don't know what happened. But there's all this child porn floating around out there. Somehow they can't seem to do anything about that. So we're concerned about privacy, of course, as anyone would be, but we do support the software. So, all right. GoPuff. I don't know if you've ever used GoPuff. I don't know if it's available in your area. Have you ever been sitting at home wishing you could get something from the Circle K or the 7-Eleven, your neighborhood convenience store, but maybe you've had a little too much to drink, or maybe you're just lazy and don't want to get out of your lazy boy? Well, there's a service, GoPuff, that will bring you all the stuff you can get at a convenience store delivered right to your door. Well, GoPuff has slashed driver pay in Philadelphia just 1 week after it raised $1 billion in funding. Some employees are considering a work stoppage after the convenience store delivery company cut drivers' pay from $12 an hour to $8.50 an hour. The company's GoPuff. If you go to gopuff.com and put in your zip code, it will tell you if the service is available in your area. And venture capitalist Shervin Pishovar believes the firm behind the Steele dossier shared a fake police report that smeared him. The early Uber investor claims in a court filing that Fusion GPS has information about a forged police report that accused him of sexual assault. And Roberta Kaplan, chairwoman of the sexual abuse survivor advocacy group Time's Up, said Monday she's resigning after being criticized for her involvement in New York Governor Andrew Cuomo's response to his sexual harassment scandal. Unfortunately, recent events have made it clear that even our apparent allies in the fight to advance women can turn out to be abusers. Now, think about what's happening in New York and with the governor, the nursing home scandal, and now this, some might call it a lesser scandal. While violating the rights of women is never okay, there were no deaths. The nursing home situation, there were many deaths. Could this be a little bit manufactured at some level so that the governor gets a plea deal, which, if he accepts it, it takes away the nursing home scandal? He gets immunity from prosecution on that. Just a thought. NBC's Tokyo Olympics viewership hits a new record low. Poor turnout this year. Pentagon will require COVID-19 vaccination for all military personnel. Arkansas has just 8 ICU beds open. The entire state of Arkansas, just 8 beds amid the COVID-19 surge. Virginia Giuffre, one of the women who accused Jeffrey Epstein of trafficking her when she was a teenager, filed a federal lawsuit yesterday alleging that Britain's Prince Andrew sexually assaulted her when she was 17. Not looking good. Biden welcomes the Department of Justice commitment to review 9/11 documents previously under wraps. You know, there's a whole school of people out there that say this was an inside job. I'm friends with one of them who wrote a book. Dallas and Austin school districts to require masks, defying the governor. Here in Arizona, our governor said no masks, but the Phoenix Union High School District said you must wear masks. Interesting. Democrats tee up a $3.5 trillion budget plan to follow the infrastructure passage. And there you have it. Those are all the interesting tidbits I found scanning the news today that I thought you might have interest in. So let's go back to the charts. Now, on the concierge trade alerts, you might want to grab a screenshot if you would like. S&P, Dow, Russell, crude, NQ, gold, silver. Those are the markets the CTAs cover. Now the CTAs, price behaves around a CTA number very much the way it behaves around a weekly trading zone. We've already talked about the daily chart. We know we have resistance overhead at the high of the day, which is also the all-time historic intraday high. The 38% fib extension of the last leg up from this low to this high to this retracement low. Next resistance would be at the 50% fib extension, and then the 62. So numbers to remember. We still have to clear 4440, then 4464, then 4487, and then a 100% fib extension would be 4562. Chances are, before we hit that, we'll have a new official last leg up. Support below us, we're sitting right on top of blue and climbing. Then we have the step line, and we have this trend line, and this trend line. So lots of support below us, and a lot of wide open spaces overhead if we can take out the high of today. The new all-time historic intraday high for the S&P 500 E-mini, 4438 and a quarter, trading where man has never gone before. Okay, last night's CTA for the S&P was to consider being long 4437. Now we put in a swing high at 38 and a quarter. Basically, price was rejected. Again, price behaves around a CTA very much the way it does a weekly trading zone. One of three things happens: consolidation, rejection, or what we call the slice. Okay. Now, on a weekly trading zone, when price slices through a zone, the typical thing to happen is for price to retrace back to the zone it sliced through, and then to continue in the direction of the slice. Rejection is when the only thing left touching the zone when the 30-minute candle closes is the wick. So we ran up and got rejected, we ran up and got rejected. But let's back up to the open last night. This vertical line separates the Monday session from the Tuesday session. This is the first candle to print last night at 6 p.m. Eastern. So we opened above the BBC, but below the CFMA1. So price was pinched, and as you can see, we're consolidating right at a weekly trading zone. We've published the zone since December 14th of 2009. Only three things happen at a zone. The most likely thing to happen is this: consolidation. Here it is again. Now, once the zones are published, Monday morning, 6:15 a.m. Eastern, we don't change them the entire week. They're carved in stone. The CTAs change on a daily basis. So we got a bearish cross. That's when red and falling gets below the BBC, the green lines. BBC just stands for bull bear cross. Bullish above it, bearish below it. So we get our bearish cross, we get below the BBC, we trigger the short CTA, which was 44.23, and price dropped right to the weekly trading zone at 44.17/18. So that's 5 points at $50 a point, $250 per contract traded. When price drops to a weekly trading zone, we expect it to be good support until proven otherwise. And then when price rallies up to a weekly zone, we expect it to be resistance until proven otherwise. So we consolidated from 3 a.m. This is the London Open right here. From 3 a.m. to 9 a.m. Eastern this morning. This is the 9 a.m. candle. This is the opening candle on Wall Street. So we had a bullish cross over here, bearish cross, down to support at the zone, up to resistance at the zone. Price pulls back to the BBC. We expect it to hold. The pullback holds more often than it doesn't. We consolidate for a couple more hours, and then over the course of an hour and a half, we go from zone to zone, 44.26 to 44.34. That's 8 points at $50 a point, $400 per contract traded. Price then pulls back to the BBC. It spiked it, but we closed above the BBC. The pullback holds more often than it doesn't. That sent us up for a second trip, zone to zone, and we're currently consolidating at the weekly zone, 44.34/44.35. So we went from zone to zone to zone to zone, back to the zone, and one more time up to the zone. So what's the high probability move from here? Well, once this consolidation is finished, if price can get below the step line, then a pullback to the BBC is the logical thing to happen. Everything we do is based on logic. Everything we teach is fluid across all markets and all time frames. Anything I say about a daily chart is equally true for a 30-minute chart, a 1-minute chart, a range chart, a weekly chart, because price flows the same in all dimensions, all markets. From support to resistance, back to support, back to resistance, over and over, again and again. It is a never-ending cycle. So, as this consolidation finishes, one of two things will go up and trigger, or attempt to trigger, the CTA long, or we'll pull back to the BBC. Now, this pullback, there's a window of opportunity here, but it won't be published as an alert. And the reason is every one of the, how many alerts do we have now? I know we broke 8,000 over the weekend. Here we go. We've issued 8,020 alerts over the lifespan of Logic 247. And we're currently in week 158. Yes, 158. And last week, week 157, we had 61 alerts total. 8 never triggered, 1 carried over to this week. So we had 52 actionable alerts, of which 4 or 8% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and that 3-step process that we teach all of our traders. Okay, every one of those 8,020 alerts is a trend trade as defined by the 30-minute chart and where price is relative to the BBC. So while it's a high probability that if we get below the step line, price will drop to the BBC, that would be a counter trend trade because we're above the green line. So that won't go out as an official alert. 44.31 to 44.29 for anybody that's interested in trading it. But again, it won't go out as an official alert. Now, the reason we don't put counter trend trades in the alert channel, there's nothing illegal, immoral, or fattening about them. They just don't have the same high probability, low risk nature as a trend trade. Moving on to the Dow. Last night's CTA for the Dow was 35065. The short side, the yellow lines, that's this weekly trading zone from last week. So the short CTA last night, 34,970. Thank you, Val. Thank you, Dell. Dell was gave us a compliment on the weekly trading zones. Thank you very much. I appreciate that. Okay, so the market opens last night, 6 p.m. Eastern, comes down through the CTA, which means be short 34,970, and it takes us right to the weekly trading zone at 34,930/935. So that's 35 points, $5 a point. The market consolidates at the zone. We get that same bullish cross. We had a bearish cross followed by a bullish cross, just like on the S&P. The indices tend to trade, not in lockstep, but they flow together. And the best trading conditions are when you have all four flowing together: S&P, Dow, Russell, NQ. So we get our bullish cross. We consolidate here above the BBC. And then 10 a.m. Eastern. Actually, here's the 9:30 opening candle on Wall Street, which leads us to this candle. We had a trigger here, but it's 5 points, and then we had a little pullback to 350.48. Okay, and then this is a weekly zone from last week. That's why it's yellow. Now that we've traded through that, I'm going to go ahead and remove it from the chart. So from 35065 up to 165, that's 100 points at $5 a point. It's $500 per contract traded. If you've earned the right to trade 2 contracts, then it would be a $1,000 move. If you've earned the right to trade 10 contracts, that's a $5,000 move. Worst thing you can do is put the horse or the cart before the horse. It's awkward for the cart and the horse. When you start out with us, when you first get your passport, you have access to everything we do, live training room every day, the workshops, the unlimited one-on-one mentoring, the methodology, the indicators, the alerts, all that. And you should start trading live with Michael in the live training room as soon as you get your passport, but in your demo account in the simulator until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, our 24/20 blueprint will give you the green light to go live with 1 contract. You'll trade the 1 contract until you've increased your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a 2nd contract. You only add 1 at a time, and you only add with profit you earned in the market. If you follow the blueprint, it makes it very difficult to blow up another account. Not impossible, but very difficult. Because once you go live, anytime you have 2 consecutive days in a row where you don't reach your goal in 10 trades or less, you're going to come out of the live account back into the simulator. It's not a walk of shame. It's a smart business decision. And you're going to book a one-on-one mentoring session with myself, Michael, Valerie, Bert. We're going to get you some help you figure out what happened, why you had those 2 back-to-back days. Was it something you did wrong? Was it just market conditions that weren't suitable for trading? We'll help you get that squared away, and then once you get your confidence back, you'll go right back to where you left off in the live account. With that process in place, if you stick to that process, if you stick to the blueprint, again, it makes it very difficult to blow up an account, but not impossible. It'll take a while. Now, just because you have a passport, if you don't follow what's taught, if you're still holding on to old ideas that didn't maybe serve you so well, it cost you a few bucks, you got to let go. You got to let go of the pier to see what's across the sea. So 10 days in sim, 10 consecutive days in sim where you reach your goal, and you go live with 1. And as you build your trading business, as you build your account size, once you've worked your way up to 10 contracts, 2 S&P points, it's worth $1,000. That actually puts you in the top 3% of wage earners worldwide. So that sounds great. Why do 9 out of 10 people fail? It's pretty simple. No teacher. You cannot learn how to swim by watching videos. You cannot learn how to trade by watching videos. Now, videos can help, books can help, workshops can help, mentoring sessions can help. They do help. But you got to be in the pool. You got to get wet. So that's why we want you to start out in sim. But Michael is trading in the morning in live markets, taking off trades, and explaining every move he makes. Our methodology and strategy is super simple. He explains everything he does. There's a reason for everything. And as you're following along, trading in your demo account, you should be asking question after question. Why'd you say this? Well, what does that mean? Well, now what are you going to do? Okay. He's very patient. He'll take time to answer any questions that you have. So what's the next high probability move on the Dow? Looks like a pullback to the BBC. Pullback holds more often than it doesn't. And that would give us another trigger at the long CTA. Triggered on the short side, triggered on the long side. It's possible buyers come in here. If so, we want to get above that swing high. And that gives us a window of opportunity up here from about 35,170 up to 35,200. But now price, because it's gotten below the step line, it's got to overcome blue and climbing, it's got to overcome the step line, it's got to overcome that swing high and that swing high to get to that window. So really the best thing for someone trading intraday right now would be a nice fast pullback to the BBC, which would give you an opportunity to trade on the long side. Going back to yesterday here, this is the Sunday night open right here. See how price consolidates at the zone, goes from zone down to the zone, back up to the zone, just keeps coming back, coming back, coming back. You should think of the weekly zones as fixed support and resistance, because once these zones are published, they're good for the entire week. They never change. Some people will tell you, support and resistance is old-fashioned, horse and buggy. Come on, man. Don't you know we got algorithms now? Yeah, I know. But that doesn't change the underlying fact that price moves from support to resistance, back to support, back to resistance, over and over again and again. Okay, let's go to the Russell. Yeah, the Russell has been just flat for 2 days. No trigger on the Russell. The yellow lines are weekly zones from last week that were important yesterday. See how yesterday we consolidated for many hours at last week's zone? And then yesterday we did spike up and touch the weekly zone at 2264/65. And we just consolidated. And we dropped, consolidated. And then we spiked down and touched the zone. That's the current weekly zone, the gray line. And then again, we spiked down and touched it. But we have not triggered the short side or the long. Now we've had logic alerts trigger. Those are the ones that are based on current price action and come out around the clock 24/7 from Sunday night to Friday afternoon. These are based on historic price action and are published as a static report every evening shortly after the Globex open. We opened here, bearish cross, just like the other two indices we looked at, followed by a bullish cross. But the Russell is just in no hurry to go anywhere fast. The NQ, the fourth index, 15166 on the top side. And on the short side, 15028. So here's the open last night. Price comes down to the weekly trading zone, where it consolidates for quite a few hours. Then we get above the BBC. Price climbs the back of blue and climbing. Look at that wick. Just touches the zone. The zone is 15157 slash 15158. And again, the zones go out Monday morning, 6:15 a.m. Eastern. We've published them since December 14th of 2009. So we hit the zone. We come down through two zones here. The NQ got hit hard today. On this first trigger, we dropped from 15028 to 15007. So basically 20 points, 21, 20 points at $20 a point. It's $400 per contract traded. Important prices, important areas are almost always tested. So on this one, price, as you can see, after it made that first move, buyers came in, drove it back up just above the trigger. Then we come down for a second trigger. This time the swing low is 14,994. So that's 34 points at $20 a point. About $700 per contract traded. And now price is hanging out just below a zone from last week, which was important yesterday. That's why I left it on the chart. Anytime you see a yellow WTZ, that means it's from the previous week, or sometimes a zone will stay on my chart for a couple weeks because price just keeps getting drawn back to it. So the high probability move here is back down to the zone. If the zone doesn't hold, then we may trigger on the short side once again. Okay, and no trigger on the long side. But here's that same bearish cross. Here's the open. Bearish cross, bullish cross, just like the others. All right, now we'll go to crude, which is not an index. The index is something that man thought of. It's a man-made idea. When we go to crude and gold and silver, that's a different ball of wax. God made that stuff. And there's a limited supply. Okay, the CTA last night on crude, short side was 66.15, never triggered. We opened right here. We pull back to the VBC. The pullback holds more often than it doesn't. Sent us up to trigger on the long side. CTA 67.55. This first trigger took us up to 68.05. So that would be 45 or 50 points, $500 per contract traded. Here's the trigger. So over an hour and a half, and then price gets back below the trigger. The pullback holds again, held here, held here, held here. Now, not all triggers are created equal. On a long trade, you want the support of blue and climbing. We bounce off the BBC, which is what we anticipate, and we do go through the trigger, but we run into red and falling, and we know that red and falling is potential resistance. So this is a trigger that you would probably not trade, because what happened is exactly what we would expect to happen. Blue and climbing represents support. Red and falling represents resistance. So we go back below the trigger, and then we get this candle, okay? And we go from red and falling to blue and climbing during the life of this candle. But as you're looking left, you've got potential resistance there, there, there. So the true window of opportunity on this trigger required some patience. You needed to let price prove itself, because price is always trying to get to a weekly zone. If price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. Now, it doesn't always get what it wants, but at least we know what it's trying to do, and that's the side of the street we want to be on, because the market's always right. So we had a very nice trigger here, okay, but then this trigger, red and falling, no go. We let price prove itself. This was the 9:30 a.m. opening candle on Wall Street. Once we take out this potential resistance here, and you had an opportunity to be long 68.25 up to the zone. $10 a tick, so 10 ticks, $100. A $1 move, as an example. Yesterday price was trading at 66.40. And as buyers rallied price up to 67.40, that's $1,000 per contract. A $1 move in the price of crude is worth $1,000 per contract. A $1 move in gold is only worth $100. And a $1 move in silver is worth $5,000 if you're trading futures. And as you can see, price is consolidating here on crude, just like we saw on the indices. Price goes from zone to zone to zone. Only three things happen. The most likely is consolidation. Second most likely is rejection. That's this, when the only thing touching the zone when a 30-minute candle closes is the wick. That's rejection. And then the third and least likely, but it happens, is when price slices through a zone like it's not even there. When that happens, price tends to retrace back to the zone it sliced through. Then it continues in the direction of the slice. No, John, we don't. I don't teach how to create the zones. It's not something that's really so much teachable. Although I have said when I retire, I'm going to teach all of our partners how I do it. But no, we provide them to you Monday morning, 6:15 a.m. Eastern. We've published them since December 14th of 2009. It will become one of the most important and valuable tools in your trading toolbox. And I say that with all modesty, because I wasn't clever enough to come up with this. This was just a straight up gift from God. It truly was. Okay, moving on. Gold. Short side, 17.18. No trigger. On the long side, 17.38. The swing high here, $60. The swing high here, that's $140 there. $10 a tick. So the trigger was 17.38. The swing high was 39.4. So $140 per contract traded is what the market made available. But as you can see, the CTAs behave a lot like the weekly trading zones. I mean, price basically ran up to the CTA, and while it did give a couple of tiny tradable opportunities, ultimately price was turned away. And so price comes down to this CTA and it doesn't even touch it, and it turns and goes the other way. So it sort of defines the playing field, if you will, just like the weekly zones do. When you put the zones on your chart at the beginning of the week, and picture yourself at a football game and you're sitting on the 50-yard line. As you look to the left, you got the 40, the 30, the 20, the 10. You look to the right, same thing. And so going into the week, all of our traders know what the highest possible price is that we expect to trade in the S&P and all the other markets, and the lowest price. And so when we look at that daily chart or look at our larger time frames, we have a good idea where we stand for the week. If I go back to the daily chart, we've got a weekly trading zone. I guess you can see it better in the 30. Our lowest zone for the week, this week, is down here at 43.67. 43.67. Okay. And then the highest weekly zone for this week is 44.70, which is right there, 44.70. And the zones, it's like 26/27, 34/35. And this is we've only got 2 more zones overhead. And it's pretty early in the week. Anytime we reach the highest or lowest weekly trading zone by a Tuesday morning, we usually see a reversal that takes us all the way across to the opposite end of the spectrum by the end of the week. Okay, we've covered gold. Silver's the only one left. The long CTA was 23.67. The swing high was 67.5, basically rejected. And the short side, 23.19, no trigger yet. So the S&P is still making up its mind. Are we going to get a pullback to the BBC, or are buyers going to try to take us higher from here? If we clear this zone, I would not trade 44.37. I would wait for price to get above this swing high at 38.25, and then on a little pullback into that area that shows strength, then trade it up to the zone overhead at 44.45. The Dow, kind of the same scenario. You know, are we going to pull back to the BBC? If so, we expect it to hold. Gives us a long trade from here. If buyers are more committed than sellers, then we'll take out this swing high, and we've got a little window up there. Russell just flattened sideways now for 2 days. Our man in the street. Now remember, I told you at the beginning of the week, the zones are very narrow this week, and that we should anticipate a lot of consolidated sideways trade. And so far, that's basically what the market's given us. Still consolidating on crude. Either we pull back to the BBC and catch a long trade from here, or buyers show their commitment by taking us above. I mean, we've been up against this area here for 1, 2, 3 hours, and looks like we're going to try to make another run at those highs. You definitely want to get above those highs, and then you can trade into the zone from $69 to $69.30. That's a $300 per contract move. Right now, you just got to be patient because there is no trade at the moment. high probability move from here is price coming down to test blue and climbing. If blue and climbing doesn't hold as support, we've got a window of opportunity down here. If price can overcome the zone and that swing high and that swing high, that takes us back to the trigger, but we want to get above that swing high and trade this big window of opportunity up here. In Q, okay, this bounce took us to red and falling, and the zone itself is 15.041/042. If buyers are committed, they could drive us up to BBC. Remember, the NQ is the only index in the red today. If we get a bounce up to the BBC, then we'll trade it short. We're right above the zone. There's not enough room to run to make this trade worthwhile. So we would want to wait and let price get below. Trade it down here. The CTA, John, is the concierge trade alerts. We have two types of alerts. We have the Logic 247 alerts. We have the concierge trade alerts. The concierge trade alerts are based on historic price action. We've published those for about 8 years now. Okay, they come out shortly after the Globex Open each evening. We also have our round-the-clock alerts, Logic 247. We're currently in week 158. These are based on current price action. The concierge is published as a static report, good for the entire session. The logic alerts are individual trades. Okay, it could come out at 2 a.m. or 2 p.m. It's whenever opportunity presents itself. We have traders around the world, and so our day session is their night session. Sunday night was a pretty good night. We start Sunday night 6 p.m. Eastern. The channel stays open for business till Friday afternoon at 5 p.m. Eastern. We had a carryover on the NQ, and that was worth $500 per contract traded. We had a long on the S&P, $87.50 per contract traded, and then no trigger on the Dow, no trigger on the Russell. And we had a short on crude, it was worth $160 per contract. We had a short on gold, $7,910 per contract traded. Silver, $9,225 per contract traded. That's what the market made available. We just point you in the right direction. Okay. S means sell, T means target. That's initial target. And then potential support, second target. Potential support, third target. S is sell, B is buy. Every alert has an initial target, and in most cases will have a second target, and then the final trade to target is the weekly trading zone. If it's a long trade, then the final target will be the weekly zone above, and if it's a short alert, the final target will be the weekly zone below. And these are all of the alerts so far this week. And again, these are based on current price action. I haven't put anything out today because the market, if there's no opportunity, I don't ever put out alerts just to entertain folks. If there's no alerts, that's because I don't see high probability, low risk opportunity. And again, we have arrived at alert number 8020. Since we launched the Logic 247 service, 158 weeks ago. My, how time flies. So hopefully that answers your question, John. I'm sorry, I called you John. It's Josh. I apologize. I might be due for some new reading glasses. So if you're on the trial, Valerie should have given you access. Well, I know Valerie gave you access to all the Telegram channels. You need to get plugged into the discussion groups. You need to get plugged in, to the alert channel so that you can participate and make the most out of your week. It's also important to get the platform downloaded and the indicators up and running so that you can trade along with Michael in the live training room, so that our goal is at the end of a week, you'll know if what we do is right for you. Passport is lifetime membership. We've all spent a lot of money buying a lot of trading stuff on the internet. We provide everything a trader needs under one roof, one low price. No recurring weekly, monthly fees. That's it. Once you buy your passport, it's good for life. It gives you access to the live training room every day, unlimited one-on-one mentoring. We teach you our methodology and strategy. You own the indicators for life. You get the logic alerts and the concierge trade alerts. 9 out of 10 new traders fail because they simply don't have a teacher. If you want to become an electrician, a plumber, an automobile mechanic, or a brain surgeon, you instinctively know that that's going to require finding somebody to teach you. You're either going to have to go to trade school or university, or depends on what field you choose to go into, because trading has such a low barrier to entry compared to most career paths. If you got a few $1,000s to throw in an account and $20 to buy some business cards, poof, you're a trader. That's why so many fail. If you want to be a doctor, well, that's going to be about 10 years of college, or 8 years plus my specialty, whatever that is, and many, many, many thousands of dollars. But people find trading and they go, oh, wow, I can open my own business for a couple $1,000s. And it's true, you can. But it's going to be tough unless you have someone to teach you the ropes. They say it's easy to walk on water if you know where the rocks are. So I guess we show you where the rocks are. If 9 out of 10 fail, then I guess 1 out of 10 succeeds. Find the one who succeeds and ask them, when you started trading, did you have a teacher? 9 times out of 10, they'll say, of course. How else would I learn? But we don't all think that same way. We should. But most of us just do like I did, and Michael did, and you buy every indicator and oscillator in existence, and when none of those make you rich and famous, you start rolling your own. And when that doesn't, and by that point you've got so much stuff on your chart you can't even see the price candles anymore. And so that's where Michael and I found ourselves in about 2006, 2007. And so instead of buying more stuff or coding more stuff, we just started getting rid of stuff until we shaved it down to what mattered. It's all about price, and price flows on a 1-minute chart the same way it does on a monthly chart. Crude oil flows the same way gold flows, and the S&P, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Okay, time for our good word for the day. Last 5 days we've had some fishing lessons. If you missed the show, you can always go to youtube.com/CFRN. We archive every daily show there. Every one of the recaps that Michael has done and that I've done over the last 1,700 plus days, they're all archived there at youtube.com/CFRN. Okay, today we're going to talk about doing the right thing. 1 Timothy 6:17. Teach those who are rich not to be proud and not to trust in their money. Another translation, as for the rich in this present age, charge them not to be haughty, nor to set their hopes on the uncertainty of riches, but on God, who richly provides us with everything to enjoy. Taskmasters don't come much tougher than Bob Thompson. For 40 years, he pushed his highway workers hard, 6 days a week, from April to December, to finish the job before the first frost. Their loyalty, sweat, and hard work helped make him a very rich man. Thompson remembered this and returned the favor. When he sold his company, it was Michigan's largest asphalt and paving business. He gave his 550 current and retired employees $128 million from all the money he made over the years from their labor. That's huge. Nobody does that. But Bob Thompson did. Even surviving spouses got checks. Some 90 employees became instant millionaires. Thompson started the Thompson-McCulley Company with $3,500 his wife Ellen earned as a substitute teacher. The first 5 years in business were challenging. He didn't even take a salary. So why later did he give away so much of his fortune? He said it was the right thing to do. You realize the people around you have gone through all the pain and suffering with you. I just wanted to pay them back, he said. When the checks were handed out, Thompson wasn't present. Now you'd think, right, if you were getting ready to lavish all of this on your employees who had made you a millionaire over the years with your leadership, you'd want to be there to see the look in their eye, get slapped on the back a few times, shake a few hands, kiss a few babies. But he didn't show up when the money was handed out. He said, I didn't want to be there because it gets too emotional. This man was practicing what the Apostle Paul talked about when he said, teach those who are rich in this world not to be proud and trust in their money, which is so unreliable. Their trust should be in God, who richly gives us all we need for our enjoyment. Tell them to use their money to do good. And doing good is a full-time job. The person of character is guided by the North Star of goodness that leads him or her to ask in every situation, what's the right thing to do? And the answer is always, do the right thing by others. And that's our good word for the day. And Dale shares in the chat box, I'll tell you what's been holding me back is a couple things. One of the reasons is you can spend a lot of money on training and there's no guarantee you'll make money trading. That's very true, Dale. If you spend money on an education, you'll be able to make money from the field you choose. And thank you for your kind comment there, Dale. I appreciate that. That's what we're about, guys. We're about an education. There's no magic, there's no tricks, there's no secrets that we found in a cave and a urn in the Gobi Desert. Everything we teach is based on logic. It's fluid across all markets and all time frames. To get your passport, just go to eminifuturestrading.com. You'll never have to spend another dime on trading stuff. I mean, you can if you want to, but you won't need to, because we provide everything a trader needs. eminifuturestrading.com. If you have questions, call Valerie at 949-42-EMINI or send an email to support@emini.com. cfrn.net. And while you're on the trial, for everyone that is on the trial, be sure to book a one-on-one mentoring session with Michael or me or Valerie or Bert so that we can get to know you, answer all your questions, and we can talk about whatever issues and struggles and challenges you've had learning to trade. And then, we'll tell you what we can do to try to help you overcome that. And then by the end of the week, once you've been in the room and listened to the afternoon recap and had a couple mentoring sessions, you'll know if what we do, if what we offer is right for you. EminiFuturesTrading.com. All right, that's going to do it. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.